Well, hello, everybody, and welcome to the stream. Of course, we're ready to go through all the markets right now. It's been volatile, it's been fun, and I would say that it's been incredibly enlightening in terms of what's been happening on these indices, Ty. Great index trading has been happening. We've been there. Hopefully, you've been following our main channel, our Discord community, and getting a hold of some of it. And it's not a sell-off across the board, is it, at the moment,
No,
Ty? It is
no,
really...
yeah.
FTSE's making new all-time highs at the same time as the US market's looking shaky. It's a wild world out there.
It is. I think everything's finally operating independent of each other, which is awesome because it means that you get more trading opportunities. Because when everything's correlated, for right or for wrong, you're really picking your side and you're trying to pick the weakest or strongest side. But I think they are operating independently of each other at the moment, which gives us, it means that you can look at all of them in isolation and potentially trade all of them for different reasons and potentially in different directions. But welcome everybody. And yeah, hopefully you've been able to get hold of some of this. The community's been all over it. Been a lot of good trades picked up in there. The channel's working really well. So hopefully you're able to take part in that.
Yeah, exactly, Ty. So let's have a look here at the current cycle of some of the sectors. I think we like to start. Let's start our week videos like this. And let's just quickly look at, well, we'll go with year to date so far. So let's look at the sectors that are moving. For anyone that's done the private mentoring, you'd know that I'm a big fan of sector analysis, and so is Tyrone. And it's one of the things that we would say differentiates. It's part of the reason that differentiates the 95% of traders to the 5% of successful traders. Understanding rotation is a very big key. Now, we've seen some defensive style plays coming through here, Ty. Financials holding up in the year to date. Jets. Yes, I said it. The hideous aircrafts. They're moving 6.64%. They're actually showing some great base, and we'll talk about that one. And we said we'd do some deep dives into those things. But could it be all over for energy? We hit our 92 resistance, and that starts to make us think maybe, possibly, we could be in for a bit of a shock. And we're still on this gold train, aren't we, Ty? We're still on the point of maybe gold is going to start a little bit better coming into 2022, into February, March, and all those periods. So let's start off here with some currency. DXY showing uncharacteristic weakness. Some people don't understand why this is occurring. My personal opinion is the way that it works is that we have so many other currencies right now also doing the same thing. This is not just saying the US is raising rates. If you look at the Australian 2-year or the Australian expectation, that's got 5 rate hikes in it, whether it comes to fruition. The US has got pretty much a guarantee now that not only are we going to get 1 rate hike, we're going to get 3 this year. And the European, countries, they're also rate hiking as well, Ty. And so is London. A lot of the Western economies looking at those 4 to 5 rate hikes over the next year and a half. So it's that reason, I think, alone that the markets are saying, well, you printed more cash. Everybody else is tightening at the same time. Maybe you deserve to come back down trend line.
Yeah, that's right. And I think it's still at that level, though. Make no mistake. I mean, she ain't going short just yet. I guess it's at a very, very strong level at the moment. If it breaks down from this level, though, I start to get a bit concerned. No question about that. But at this stage, to me, it's sitting right at the place where it's do or die for it in a sense. And there's a few currencies that are at the same sort of level, really. Like it's a do or die level. So it's going to be very interesting. I'm not totally giving up on it just yet. Like that could easily, if it breaks up above that 96 and off we go again. And we can see, I think anything can happen and possibly could on so many different things at the moment. And I think that's actually a good thing for trading because it means that the technicals are actually standing up. All we need to do is let the technicals actually play out. I mean, if you were, what would you do? You wouldn't short this and you wouldn't long this right now, right? I mean, all of you should know this, that you would not do anything on this until it actually does something. And right about now, if you took a stab, you are absolutely taking a stab. You couldn't tell me that you know where this is going on a technical because I don't see it. And if you see it and I don't, damn, we'll send us an email and show us because I don't see the technical that tells us. I don't see it.
Well, I think that's the thing. We've got this great resistance here at 95.80, and then we have a very strong kind of support that's flowing around that lower time frame down here. Now, if you actually go back over to a daily, you can kind of see that the market is hovering here. Some people might call this a little bit of a coil. Some people might call it a flag on one time frame. I'm sure it's showing it. But in general, it's all about we breach above here, getting above moving averages. We're allowed to go towards that 96.50. You breach below, I'm thinking back down to the lows here, and I'd box structure up something like this. I think there's a good trade coming here, Ty, and
Yeah,
it's
I
going to be
agree. I
fairly
agree.
abusive.
I think both of them, the long or the short. This is why I like what the market's doing at the moment, because I think either way, a lot of the time, when I'm talking about it, I always say, well, I've got a little bit of a bias as to what side I'd like it to go, because the technicals make more sense if it breaks one way or another. But this is truly in that place where whether it breaks up or down, I couldn't care less, actually, because I think both of them are really sound trades and they're both really, really technical, but not just yet. You just have to actually let it play out. The euro is the same thing. As you know, we did a Tuesday wrap on it and it never got in, unfortunately, but not unfortunately, I suppose it would be just sitting there hovering, doing nothing if it was in, but it has not played the game yet because it didn't close below the level we needed it to. And that's partly because the dollar index is actually doing the same thing, right? Sort of stagnating and doing nothing. Mm-hmm. People are calling a double top on that. And I mean, come on, guys, that's not a double top, right? Yeah. It's just, it's not a double top, right? You guys know that, yeah? Tell them, Thomas, why that's not a double top. I mean,
well, there's a lot of problems with calling it a double top. I think one of the biggest issues is really, what is the idea of a double top? You're meant to be kind of in some kind of upward trend. This looks like an overall downward trend. It's like saying it reverts back and then it goes back down. We don't like that. The end of a trend is the pattern here. Yeah.
And that trough in the center is way too deep in a downtrend. It's not.
If anything, it's more of a kind of double bottom where it's consolidated here, and
you could make a better case for the bottom, really, than the top.
Yeah. Look, I think the euro, the currencies are interesting. I did a session with Pepperstone just before, and Chris and I were talking about gold. And obviously, you're probably sick of us hearing, Ty and Tom, come on, man, you've been going on about gold since December, but listen to this. Well, firstly, I just want to run down the show. Today, we're talking about indices, stocks, of course, crypto. We're starting off here with our commodities and currency discussion. And by the way, if you do enjoy our sessions, please smash that like button while we're live here. It does help us go through the algorithms and do the magical stuff on YouTube. So, Ty, we're talking about gold. And one of the things that I just want to bring up with the private community as well, and I think we've reiterated it several times, is that it may not be best to just trade gold versus US dollar or always. It's sometimes you want to go and look at what's the strongest currency, what's the weakest currency, and then trade. If you believe gold's going through a bullish signal, let's say on gold US dollar, you might actually make more money by trading one of the crosses. So one of the ones that I think Chris was looking at was gold versus, I think it was yen. Now, I'm not sure if it's going to come up gold versus JPY or what the actual code is here. But if you do bring it up, and I would say I don't have it here right now. Let me see if I can bring this up. Probably X. Let's try the code symbol. Yeah. All right. Well, I don't know
what symbol he is actually. Yeah, I did catch the last.
I don't know what the symbol is. But anyway, the point is, look, it's obviously a tradable thing here, and what it's doing is it's going into a resistance. So if you look at gold, it's been ramping in, and it's right there, and it looks just like this. So basically, we have resistance, 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 and you're at that point. And when you close above that point, well, it could be explosive because the cross makes sense for this current strength versus weakness in the currencies. You go look at yens right now, and you consider the correlation that's had. There we go. So it is XAU JPY. I'm just not sure why it didn't come up. Let's have a look. XAU JPY. Let's see if I can get it.
Of course, there's always a goody two shoes that knows it.
Yeah. Let me get this.
Well, it's always Stephen. Oh, teacher's pet.
Stephen, well, it's not coming up, Stephen. I'm telling you. Look at this invalid symbol. Oh well, I don't know what I'm doing here. Obviously, it's not working out for me. But the point is, you go look at it yourself, and you'll find it. And I'm going to give up on it right now. We'll move on.
So no spaces apparently, Thomas. No spaces.
Oh, there's no spaces. All right. This is the only thing I don't like about TradingView. We'll use Pepperstone's one. There we go. So here's the resistance. Fantastic. I love this trade. If I actually hit this the other day, I would have been very happy with myself. And the reason I love it so much, and I saw it on the chart and I went, I've got to mention this, is because check out one of the things. I love this trade so much. That is a fantastic bottoming base. And when you see that type of thing here, especially this bullish hammer, Ty and I aren't immune to missing out on sometimes good opportunities. If I had this one in my scanner at the time, I would have bulled that thing all the way into this resistance, and I'd be descaling here. But
the
if
US
it goes
dollar CAD
through,
did the exact same thing, that exact same pattern. If you overlay that with the US dollar CAD, it did the exact same thing right on the 200 before we called it long, and it did the exact same thing. I love those patterns. Love them.
It's so beautiful, Ty.
Yeah.
That, and you know what I love most about it? It's kind of like taking out a lot of people's stops. Because when you think about it, a lot of people are going to have stops here and here and underneath here. It's come down, slammed all of those. Then it's gone down lower, and we've got what we call liquidity grab over here. And we've got a double liquidity grab, big V reversal all the way up, and beautiful resistance. So there's a lot of run through here to that 21.4 level for XAU, JPY. Nice code, very nice. Pretty good technical trade here on the left-hand side as well. You can see there's been some great breakouts. Look, it's acting technically. It's got great. I like it.
Very, very technical. Yeah.
Mm-hmm. Great resistance, guys. Check out gold for this week. I think it's going to be worthwhile having on the charts. Along the same lines, if you look at silver, this was the one that I did look at, but the other one has better gains. And this is a very similar style pattern, isn't it, Ty?
Yeah.
Very similar. Breach.
And all you're looking at, I mean, you're looking at, all of those cause and effect candles are basically the buyers and sellers having their war, and in the end, having a very indecisive, conclusion, but very, very big action in every candle. And that tells you all you need to know. If it's at a level of support, all the better. And then off we go. Very, very straightforward. No, there's no magic there. There's no magic, right? It's what we say every, day in, day out, week in, week out. Look at the candle structures, understand what the buyers and sellers are doing, and it tells you everything you need to know about the market. I can't wait to do our price action segment at the conference. Actually, we've got a really good presentation that Thomas and I do together on the lightning bolt effect, and we go right into detail on that. So, yeah, looking forward to bringing that, dusting the covers off that book.
Is there cobwebs on that one?
There are cobwebs on it. We haven't done it in a while. It's been COVID. Hey, COVID. Speaking of which, Thomas doesn't know this yet.
There's a huntsman on it.
Yeah, no, apparently it's come to my attention that the best conferences in the world have T-shirts for all of the delegates to wear. So apparently we're getting a T-shirt made up for all of the delegates. So you're going to get all of the people who have actually registered for this webinar so far. You're going to get a form in an email very shortly to ask for your T-shirt size, because apparently when we get on that boat, the Evolution, everyone's going to be wearing the same T-shirt with our advertising on it, Thomas, and that's going to be your souvenir. Thomas doesn't know that yet. He's just sitting there saying, "Oh my god!"
My eyes are like, "Who's designing this T-shirt?"
It is costing us a fortune. That's what Thomas
does it say. Does it say buy the? Does it say? Does it say something like buy the dip on the back? And they have a little.
It's gonna have something really, really cool. It's gonna have a few things on it. They're gonna be really, really cool. But yeah, that in all seriousness, there is going to be a conference T-shirt.
All right, but don't make pens. I don't like the pens.
No.
Break. No pens, okay? No USB drives. No rulers. I don't want any of that stuff.
It's gonna be usable stuff. It's gonna be things like T-shirts.
All right. I want a Bitcoin hat. Okay, so silver and gold, fantastic stuff there. Look, you go through most of the currencies. You've got some big breakouts here. They are alive and well, the currencies this year, no matter which one you're really going through. Definitely. You've got key resistances coming up here, things like pound CAD. You mentioned pound before. CAD, US dollar CAD before, Ty. And yeah, these resistances are looking fantastic. So 1.73 here for the pound CAD. You can go through and find so much opportunity. But let's scroll through to what a lot of you are here for. And let's talk about the broader markets at this stage. And we'll switch lists here and we'll go over to the US 500 because it's breaking out here in the futures market. And look, I think this is probably part and parcel of everyone being so ultra bearish. I could see a case here, Ty, where the market goes bullish, breaches even a 4,600 and then still turns somewhere in the mid kind of cycle here. And for anyone that missed today's video, part of the reason why is because when you think about midterms, when you think about these midterm elections, they're going to mean a big deal. I would say it's going to be, we don't go into political past that, but it's going to be very volatile for the markets. And if you look at the year two, Q1, Q2, Q3 for 50 plus or 70 years of data, it points towards a hideous kind of start to 2022, not for a trader, but for an investor. But what I'm really excited about is this. And I think if you stick with us through 2022 and you're there at the back, But okay, you are going to stick with us. We use positive enforcement here. Then at the end, if we get the right basing formations, let's say we see some pick off into this year to Q4 period, I mean, there could be some serious gains. And we're talking gains that might be predictable, gains that might run for multiple months. And the stats don't lie, Ty. And a lot of people might have sometimes lost faith. I had a bit of an angry comment today. There was no Christmas rally. I argue with them because I said, well, there might have not been a super rally, but if you notice, the Christmas rally drops at 5th. So the 5th of Jan, Christmas, basically Santa goes back to the North Pole is the idea of the stat. And then after that was the market. But it still rallied through that Christmas period. It still went up, although it was up, down, and all around. The problem is everyone was in growth, and growth was already declining. So
I'm not sure what market old mate was looking at.
No, it's because they're in growth. If you're in hyper growth, you would be getting destroyed. So let's break down this market on a smaller time frame. Let's actually go and look at the 1 hour time frame here and understand, or we'll look at the futures market, but I want to just talk about this base that we saw. It was a fantastic trade. You should always take this trade, and the distance was perfect. And as a community, it's bellissimo. You don't get any better than that. That was absolute perfection. The dead cat bounce, the extra sell-offs. I know people like Ulrich smashed the living bejeebers out of it here, Ty, with leverage. They went crazy, and then they got more in here. I know they had a good time. But then we got the pullback. So let's have a look here at the SPX and just talk about the last couple of days of trade. So the S&P's been stuck in a range. Basically, we've tested this previous resistance as support. We've got the resistance again, the resistance again. And I think today we're going to, well, right now we're trading at 45.51. So we're going to open just above. Now, if we can hold that, what is the logical conclusion here for the market for the session? What do you think about the gap close?
Yeah, it's a really, really interesting one. I'm a little bit fearful that there's a bit of a bull trap being set up here.
Yep.
I get the feeling.
Midas points to it. Yep.
It's looking like a bit of a bull trap. Yeah, it's yeah, I'm not so sure. I'm not going to get caught up in this. I'm going to let it prove itself, to be honest. When you see this sort of thing happening, especially with the stats that you look, if we know anything about the markets, if we've learned anything, I should say, it's that history and stats do matter. In the long run, they do matter, and they matter a lot. And it's almost like, when you're, they say never fight the Fed. I think you should never fight the stats, actually. It's probably just as important. So knowing that, you're going against a very, very heavily biased statistical outcome doesn't thrill me, and it doesn't fill me with confidence. And I'm not going to lie.
Short and sharp. Midas brings up the point you're going to say, which is market gapping up makes no sense to me how we're so bullish ahead of such critical data. So he's talking about CPI here. And yes, that's right. So here's scenario one. And this is why you're going to be really quick here in this market. The market might open up. It could also fake out. Today could be a classic fake out day. So it's going to be minute by minute scalping, day trading. That is how you have to do this right now. We're not making super investment choices right now. It's not the time to do it. But if you have here, unless you're going like long term, but let's say you get like a rejection here off the open, it comes down. Be significant, obviously bearishness would come through. But if we hold that movement up and then we return and we test, then we're probably going to try to fill. And we're going to be at a key point of maybe resistance coming into the key data. Now, Tyron and I talk about this all the time. What do we say, Ty? We always say the same thing. Big news. Markets are going to be at a key point of resistance or support generally. So what if we fill that gap, hit here, and then as Ty says, we bull trap it up based on the stats and the data that we're pulling through, which basically says Feb is up, down, and all around. Only 30% of the time after what we saw in January, does February close bullish? We're now on the 9th of February. We're technically probably bullish on the month so far. Where was our first start here? So Feb 1st is basically this trade here. So we're actually bullish on the month. So there could be a very big case here to say, yes, we might be going bullish. We end here. And if you're not being short, sharp, and sweet, come the CPI data, which comes at 8:30 a.m. on the Thursday. So this is literally coming out right here. Ooh, I think that's going to be very telling. This is it. That's the one that's going to break it or make it.
Yeah, I agree. It's really being factored in, isn't it? Like a lot of people know about this. It's being heavily advertised, actually, as
Very
key
heavily, too much
turning
almost.
point for the market. Too much.
Yeah,
Yeah, too
yeah.
much talk
It could
about
be.
it, to be honest.
I think the market will do whatever it was going to do anyway. I think it's
Yeah.
fizzing to the point. And you're going with the bull trap concept. Do you think the gap can fill though before that happens?
It could. It most definitely could. But I would be very. It's not the traditional gap that I'd be excited about. Let's just say that it's one of those ones where I'm a lot of caution here. I think there's
Yeah.
better trades at the end of the day. I think there's better opportunities. Why take the risk? Why take the risk?
So
Let it play
we've
out.
got
Yeah.
gold going into resistance ahead of it. So that's obviously getting ready for a big break. And I think that's also when you say don't take the risk, do you think the better trade is actually being patient here for the next 24
Yeah.
hours?
Absolutely. Patience is key. I mean, patience, we've said it for, 15 years that exercising patience is a trading strategy in itself. You don't have to actually place a trade. You just have to look for what the signals are that you're waiting for to happen. Take the risk out of it by letting the market play out first. If it goes, it's going to go a lot further than the handful of points you're trying to pick up anyway. So just let it play out.
Yeah. So we could
Let someone else
let
risk it.
the market we could let the market have its little session and
Absolutely.
then we find out what happens on the CPI data, which seems to have all this packed in information in it. And you know what? If you breach above here then and you say, "Oh, I missed out on the US 100." Well, I very much doubt. Well, firstly, I don't think that it's going all the way to, absolute town. Maybe 15.5 would be its peak here and then it'll turn around a bit. But if we scroll down, you're going to have opportunities through ArcG. You're going to have opportunities through genomics, through jets, through all these different sectors. There's always another opportunity. So sometimes there's a time to say, okay, if I'm going to trade it right now, I've got a plan, I've got to be in and out. And there are some key points of news where you hit a level and you say, okay, maybe I need to just wait it out. And that's sometimes non-farms. And this case could be the CPI data. There's just too much information saying everyone's looking at it, and it's going to be potentially a fizzer, but most likely I would say volatile.
Yeah, I think that's probably the best way to look at it and keep, look, not saying don't do anything, just be very mindful that there is a potential trap setting up here, and you don't want to get caught up in it. Better to let it play out, and there's always opportunities.
Yeah, there is always opportunities. So early in the morning, we've got the kind of movement up here in the market. Maybe we move higher by the end of the day, but whether we're at this resistance or not, coming to the CPI data, you're going to either have to have an investment strategy. If you're having a scalp strategy coming into it, could be very risky. And I think that's probably what we're looking at here. The gold trades, the silver trades, they're all hovering around that exact point where they're going to fly probably based on the news. Now, let's move over here to US oil before we go through some other stocks. And this is doing exactly what we would have expected, which is pulling back off the 92. So firstly, I want to congratulate the community. I want to give you a clap, Ty. Everyone's getting a clap because 92, I mean, we predicted this. We I don't know if your community is a soothsayer of the US oil, but my God, from down here, from downtown all the way through, we got fantastic resistances. I haven't changed anything here. We got fantastic trades. We got bullish movements. Obviously, there was some weird thing going on in here about the OPEC deal, but we got great moves into that 92. And could this be the end for oil for now? What are your thoughts? I'm interested.
I'm really down on the fact that I'm pretty sure that some of the OPEC board definitely watch our channel, and I think they're certainly assisting us in what's going on here. I look, we've been talking about this level for a little while now. The fact that it is selling down a little bit, no surprises. Coming off that high, it got to about 93, didn't it? Or nearly 94, didn't it?
I got to 93.07 or something, but
Yeah. Like
I don't care. 92. Bail, run for the hills.
But you got to run for the hills. I mean, at the end of the day, look, oil is not the best, long-term investment if you're playing a CFD because of the rollovers and things like that. Like, it's not an easy one. It's a very tradable commodity, no question about that. But you've got to appreciate that you kind of want to be in and out on oil, right? You don't really want to be riding at the long
Mhm.
on the long haul. It's not one of those
Yep.
ones where you say,
No.
this is a great investment. I'm going to buy BHP, collect dividends for the next 15 years and retire
Mhm.
really happy. That's not what you do with oil. Like you couldn't do that with oil when it was zero. When it was negative 37, you couldn't even do it.
Oh yeah, the
Yep.
short date. Yeah, that's why, and
Yep.
and that's a big thing. If you're trading oil, know what you're getting into with futures rolls, because if you're
Yep.
not trading a spot and you're short and sharp, you can get mega destroyed.
Yep.
Yep.
And the key is to be, flexible with the market. We've got the advantages as traders to be able to swing on a dime,
Mhm.
and once the market proves itself and it does want to break a level, and when it does do it, like once it got up past that 80, we did say once it goes past 80, it quite often will run to 85 really, really quickly. It doesn't, it's not going to stop there because it's a round number. Don't forget, oil has been well past this level before. This is not like
Mhm.
it's breaking new ground. This is not like the S&P at 4,800 where it's never been there before. This has been here and far higher. And once the market does something, you've got to move with it. I mean, we've got a comment there truly saying we were saying it was crap in the 70s and our tune has changed. Mate, our tune changes every time something does it in the market. When the
I
price
was gonna, I
changes
was gonna
and
address that one. Yeah.
yeah,
Yep.
every time the market does something, you would be foolish not to change your tune if the
Mm.
market proves you wrong and it breaks a level. Because that you're never going to be a trader if you do that. I can guarantee you. You need to be
Mm.
able to work with the market. When you identify that something has changed in the market and all of a sudden a serious level has been broken and all of a
Mhm.
sudden it's moving in a different direction, only a fool would sit there and say, well, I'm just going to fight it or I'm going to keep shorting it until I get my way. That's not what trading is. Trading is adapting and being able to move nimbly and very quickly and actually changing your mind. We change our minds on a weekly basis, sometimes on a daily. We could say something on a Wednesday night, and I'll give you a totally different direction on Friday morning because something has changed in the market. So you've got to be agile and you've got to be quick. That's the whole idea of trading. And that's the advantage we've got that big hedge funds haven't. They can't get out of positions as easily as we can or into them. Right.
Mm.
So we've got to use that advantage and really read what the market's trying to tell us, whether we're right initially or not.
Well, I think a good example of that is I'm well known to hate airplane companies, yet I can't deny what I've seen on jets in the last month, and I've found that to be, an interesting scale in kind of sector. And I also think that, yes, it's 70. I wasn't a fan, and I'm not a fan of holding this, over a multi-year strategy. I'm not coming back and saying, "Oh, I love oil in 2023." I mean, for me, it's enough. It's done. Like I'll trade, but from an investment standpoint, I'm cool with what just happened with the value play there. And if we move through, like that's really just a really great technical, and I'd take that whether it was oil, lean hogs or platinum or whatever, euro US dollar. This is the type of trade that I would take, and that's just the kind of way that we apply things. So let's move over here. Just a quick question about US dollar yen while we're on the commodities, Ty, and let's just quickly talk about this currency. We got a question for it now. From this perspective, what do we feel is happening with the yen? Do you have any really strong opinions on this one? We'll go over to the weekly, just get a bit of a
Yeah,
idea of that last candle.
it's absolutely at critical resistance now,
Mhm.
and it is looking quite strong. I've got to say. I mean, if it breaks past this level here, this is it's obvious for everybody to see why this level is so important. And if we get a
Yeah.
close, probably more a weekly close than a daily close, but if we get a weekly close above this particular resistance point, I would be very, very impressed, and I would be thinking it's going to test the recent highs at around that sort of 1650, I think, in the first instance. But this is, we thought that we're probably going to see a 118, 119 early this year, and a key break now may well propel that. This moves like no other when it really starts to move. I know the yen looks like it does nothing from week to week, and you sort of think,
Mm.
oh, you're looking at the same thing. But when it does go, it goes like a rocket. And all it needs is just that little bit of strength past this
Mhm.
level, and off we go. I'd be very, very, very likely that it's going to push up into the 117 and 118s if it breaks and closes above it. But I'm more interested in the weekly than I am anything else. If the weekly candle closes above that 115 sort of 60 area where we're hovering around here and breaks that resistance, it's going to bode very, very well for next week's trading.
The story looks compelling. I mean, here we have
It
this
does.
rejection candle, bullish move against it, bullish wick. We've got three resistance highs. If we get above weekly, Tyron and I have mentioned several times, this is our aim. And, this is one that's taking a little bit too long to to work out for us. But it is what it is. I mean, it's hovered in this big range. I mean, obviously, we thought it would go more bullish around this area here. That's absolutely where we were triggering some trades. And there was valid reasons. I mean, the wicks have been snapped. You think it's going to go. 1 week it does, pulls back. But it's still holding above those swings. And when you've got that longer term approach, which is like a 2-to-1 style big trade, look, we're looking for 118. That's what we're looking for.
And I'm thinking though that the Omicron breakout played havoc with the US dollar yen. I mean, it was looking very, very strong, and then that happened, and then everything just turned to shit, really. And the yen was the beneficiary of that shit.
Just quickly, don't worry, truly. I do know. I think he's pretty bullish on energies and done quite well on that. So he's been a believer in it, and that's good. If you have conviction towards something and that's your investment, there's nothing wrong with having that conviction. You've been proven correct in that area. So I think there's a difference. We always say there's a difference between traders and investors. I still think that Cathie Wood might be correct in some of her buys. I still think she might even be correct in innovation taking out, because we're starting to see that potential. We may have just seen the highest points ever for earnings for some of these big companies like a Facebook or some of these others. But it's one of those things where you've got to have conviction. And I think there's a massive difference between trading and investing from that standpoint. Traders just don't necessarily have conviction. They just go, we buy, we sell here, we enter here.
Exactly.
And that's it.
Short term.
The data helps us get we're short term. So this is Jets, something that I'm not usually a lover of. In fact, I haven't looked at this for years and haven't traded it for years because I don't like the industry. But overall, we have huge volume transactions that have been going on. And I like the recent price action. Now, this is one of those ones that from my sector analysis, the way I look at things anyway, in my personal opinion, I liked it actually here as the first stage of recovery. You'll notice I have that big downward trend, and I have like these 2 rejections over here, very similar to a few other things we've seen recently, Ty, tonight. And this is one of our favorite kind of strategy plays, and it's playing out again. So I think Jets is starting to boost up here. Really strong gap close above, beautiful base, big volume through it. And I'm just looking for it to get through the trend line to further be potentially able to scale in. It makes sense to me as well. The US is going into the summer. I can't see people not traveling. I know Omicron this, Omicron that, but I mean, the fact is that isn't like 1 in 4 or 5 people being infected by COVID. A lot of people in the US will just travel anyway. People are sick of this stuff, and they've had their boosters. If they want to have them, it's time for them to get open and go for a bit of a traveling. And I'm seeing it with the community. People are just saying, we're going.
Well, even our borders are opening to internationals.
There you go.
I think
it's on
in 2 weeks, I think, or a week or 2 weeks, I'm pretty sure. So
is this the true reopening play coming through? Because the TA would say yes. The TA says first stage recovery is happening. Well, volume's there.
It does. And I mean, realistically, people can't wait to travel. Of course, these stocks are going to rocket up on that news. It's one of those things though where it's almost like the interest rate, fear. It's in the market spiraling, but everybody knows it was kind of factored in. It was going to kind of correct. It's a little bit like this. Eventually, everything was going to open. Is it reacting? Is everyone going to start, traveling now? I don't know. But at the same time, you got to look at the technicals. Ignore the jets. Ignore the economy. Ignore everything. The technicals say it looks like it's going to go along. If it breaks past that level, the fact that it's got fundamentals on the side as well is just a really, really big bonus. But break that trend line, and you've got a very, very strong technical case to go up, right?
And they're fairly big percentages as well. I mean, obviously, this is a sector version. You even get it from here. Just here to here is 7.5, and here to the top is 24. So, yeah, I mean, it's some pretty nice stuff here coming into some of the sectors. And I think this is where the market is really weird right now. We're seeing growth obviously getting smashed. You look at something like RK, it's on its knees. I mean, we probably will eventually see a turnaround story down here. And I'm looking at that 20 moving average still as being one of the big things, plus the break at the trend line, the troughs, the peak, the higher trough, the higher peak. I'd love to see it break through. It'd be fantastic. But at this stage, hasn't happened. Volume, again, very large down here. Like lots of transactions going on. So I'm thinking the market is starting to smell out value again in these stocks. We just don't know what's going to happen from the point of view of whether these interest rates get come through. And I'm going to go with it right now, Ty. I say the Fed goes with a 0.5% smashing. And depending on the next number, I think they're coming through 0.5%. They're just going to go lay the smack down on this. And there is a valid reason for that. And I think it's just to try to freak everybody out in terms of they don't really want to raise what the market's saying. I don't think they want to do a 5x. So if you go with a 2x immediately, you kind of say, look, we're prepared to. Now it's your turn.
Yeah.
What do you think? Do you reckon they go with a 0.5 or a 0.25?
I think they'll go from 0.5 because I think they almost, the market's already kind of factored in that something's going to happen.
99% or something.
Yeah. You might as well shock and awe it while it's done, while everybody's talking about it. Just get it done.
Yep. I think so.
Otherwise, what's worse, going 0.5 and maybe not touching it again until, the end of the year or just continually talking about it every month and saying we're going to go up a quarter. I think they would probably rather go the other way and say, because not many people would be expecting or the market wouldn't be really factoring in many more recent increases if you get a 0.5, right? Like you'd be like, a lot of people would be thinking, well, that might be it for the year or that's probably it till the end of the year. You go a quarter, the very next day we're going to be talking about the next one.
Yeah, for sure. Otherwise it'll be like, oh, okay, they mean business. But if they do a quarter, they're soft. That's what it'll probably be. You're right.
Yeah.
You're right.
Wiley says that all of the European exchanges are up significantly. What a sight. Wiley is a really, really good explanation for that. It's actually because Australia has opened up their borders and everybody is rushing to book their ticket to our conference in Cairns now. Everybody can actually come. And Truly says that the sky's the limit for oil now. Yes, truly it is, because now jet fuel is going to go up. Oil is going to go to 150 because there's going to be so many flights booked to come to Queensland that everything is going to go up. So the European side, you're right though, the European markets are just out of control. And it is a sight. And it's a very interesting sight to see when the S&P is sitting where it's sitting.
Yeah, it's this tale of, we said the FTSE is hitting all-time highs. Pretty crazy. Look at this. We've got 1.51 back on the DAX, the Euro stocks, the Nikkei. Everything's going up a fair bit today. And I think this is just really, to me, it's all about this. So many random puts just floating in the short dated market here. It's got to be. I know it's retail. There are so many retail people super scared of the markets. And the weird thing is at this stage, Ty, we've got huge puts here. Got huge puts the next week, and I bet you it drops off after that. So this could be actually a little bit of kind of going up. Everyone's like, oh, FOMO, and then they dump that thing down. And that's why we're looking at the stats along with the TA, nimble, fast trades right now.
The big instos aren't going to be putting puts in here.
Not for a week.
No.
They would already have had them in. They scale them at points up here, and that's what they're looking at.
That's absolutely retail. There's no question that's retail. Yeah. It's going to be very interesting to see how that plays out. But I tend to agree. I think once all of those are basically expired, then we're going to probably see the movement. It happens very closely more often than not. Yeah.
All right, well, let's go through some of the stocks that have been showing some bottoms. We obviously looked at Jets there in a bit of a deep dive. Another one is obviously SPLK here, which is Splunk. It's been finding base here for a while, again showing the volume. Kind of reminds me a little bit of a BHP from the action of incredible decline followed by a really nice base, and we could be breaching through very soon. So I think SPLK is one of those ones that, while it was unfortunate when the CEO kind of came out, we had some nice gains off it last time. Technically, it went up. We obviously got that big rally. Our plan was for even more, but this is where it stopped, and that's how it was. The CEO came out. Should have been descaling your position along the way anyway. And I like the base. And I think it really reminds me of parallels here with probably one of our most successful trades over the last couple of months. And that's been, BHP, Rio, and FMG, Ty, the combo meal deal. And if we look at any of these, this is a similar style scenario, really big fall off, increase in volume. And of course, the materials, specifically iron ore, has done incredibly well since then. Great gains. Few of you guys have taken this one. It's been great.
BHP's been a bonanza this year, and even late last year, it's been really good.
Question here from Graham saying, what do you think about Square? Yeah, so Square sitting about 104 here in the market open. It's come down to 100 a lot. It does have volume on it here. Look, my problem always was not that Square didn't have a business that was going to be successful or anything. It's when Jack Dorsey goes and spends all the money on things with very little moat. That really upset me. And we got the hanging man candle. We bared back down. This may be the low again for Square. And this is what's exciting about this year. Imagine if we get just a little bit of a pickup. And right now, it is the ultimate FUD. No one wants any of these companies. No one wants anything to do with fintech revolution or any of that stuff. And it's back at a price that, if you go back in history, is actually a 2018 price. So we've gone through a pandemic. Their business has grown. Their business has done really well and expanded and done all these things. Yet we're being priced in at 18 prices here. So yeah, look, it's for investors, it's one thing. For traders, unfortunately, we're going to have to wait for it to get past the trend line down, past the 20 moving average, and see a turnaround in some of our key indicators. We just haven't seen it yet.
Yeah, perfect for all reversal zone though. Like it's a great place. Like if you're looking for an investment level, these are the levels that we talk about. And if you're going to play that with the safe option, that's exactly where you'd probably potentially sell a put with the view to buy.
Yeah, I mean, if you wanted to imagine how much the put's worth on this, incredible volatility. Possibly you want to say, okay, I'd love to own Square at $100 or 104 or whatever. But if I don't, I might be able to get paid maybe a 3-month put 12 to 13% on it. I don't know what it's worth. Could be easily worth that. So yeah, I mean, that is a good opportunity here. There's different ways to play the same system. And if you're going to buy it, you have to be prepared though to cash vet that. You have to say, I was going to buy it anyway.
100%. Goodness.
Yeah, it's very important. We need to bring that one in. Just make sure everybody knows. Cash vetted, yeah. Selling puts is not easy there.
I just assume we're talking to the same people week in, week out, and they know exactly what we're talking about. We probably have to remember that we have new people here. So it just
yeah. No, that's right. We've got 81 people. We don't know if there's new people joining us. Click the subscribe button, smash the like.
There is a new person. There's Jessica's friend called Kylie who's joining us today and saying hello. And they want us to do the ASX, and they appreciate that you don't like the ASX, Thomas, and they understand.
I'm pretty sure this is some strange inside joke that comes from the Q&A. That's all right. We'll look at the ASX. You can talk about it. Let me try Google, though. I want to just deep dive concept here on Google. So Google has filled the gap backwards. It had one of its bumper earnings. In fact, it was the best earnings it's ever had, and it was pretty phenomenal. They obviously have their Pixel phone. I think it's pretty good. And they have a split coming up. Now, splits notoriously have been incredibly bullish. So with the gap fill on a solid company at a price that's probably relatively fair considering their fairly massive earnings, and if you believe they could do it again, which I think all comes down to when maybe I'll deep dive in it next week, Ty. I'll bring up some ad revenue expenditure, because when you look at it, looks like this. So this is online ads. This is traditional media. So traditional media kind of is going to shrink, and the online ads is there. And then there's this thing called like social ads, which will probably be able to be collected by Google. And you've kind of got like each one of them improving. Now, social ads is what's expected to be a big growth curve, obviously digital. And then we all know that traditional media like television stations and stuff, the expenditure is just going to go down and down and down on that. It's not targeted. It's not successful. It's not the same kind of success that you see. So I think Google could still do well here. And the split, if we looked at it, and we'll deep dive into it next week, I just want to mention it because it may go, is going to be a big one, because splits always tend to have that nice run up into them. Nvidia, Apple, Tesla, we spoke about it last week. A big deal there. So I think Google's coming much down to a more fair price. Facebook, on the other hand, that business is in stage 6, and it's terminal in terms of the way that it looks like on the market here, because it's back in the support. Sure, some people are going to try to buy the dip, but everyone that bought the dip on the first day is getting pummeled another further 15% or 10%. Pre-market here, it's up 1%. Problem with this is I think you've got to trade it. I don't know whether it's investable with its growth curve. I put a stat in there. What was it? 26% of teenagers now use Facebook versus like 90% saturation back in 2012.
Yeah, that's just an unbelievable stat. Look, it's one of those things there. I look at a chart like that and I say, I can't I can't do anything with it. I wouldn't try and trade it. I wouldn't try and invest in it. I wouldn't try and do anything. There's a lot of, no.
I'm going to call it a noob trap. And the reason I call it a noob trap is when I first started trading, what was my first go-to thing?
Yeah. You would have been all over
CBA
that.
dropped 10%. Whoa,
Bang,
I'm in. Buy the dip, buy the dip, buy the dip. And then, of course, you come across a Santos and you buy that one, Ty.
Exactly
During a dip, you lose about 40%. So,
or One Steel or BSL. Take your pick. All the companies that couldn't possibly go bad. Yeah.
All right. Well, speaking of some Australian stocks that may have burned us in the past, let's have a look here at the ASX 200. So you want to break this one down for everyone?
Yeah, perfect. Curly, first time here. Welcome, mate. Glad to have you on board. And Jessica and Kylie, this is for you and for everybody else who obviously likes the ASX. So, look, this is behaving in line with, I guess, what we're really expecting from the European indices in a sense. Although we're not making all-time highs, we're seeing a lot of that bullish movement impact our markets. I'm not necessarily sure we're going up on our news. I think we're being dictated to a little bit by what's happening overseas. To say that this level is critical is probably an understatement. 72.50 is an extraordinarily critical level. You can see if we draw a vertical line there, a horizontal line, sorry, you can see how important that is. It's on the 50 moving average on the daily, which in itself is very, very strong. But it's also, if we go out to a weekly for 1 second, you'll find it's actually also on the 20 weekly. Okay, so a very, very, very important candle. It's a pullback now that, you would say it's sort of definitely in the mids of the fib. If it's going to break this level, there is potential for it to, maybe push up into the 7400s again. But for mine, I'm very, very conscious that we're more reliant on what happens in the US than we are in Europe, for starters. And if we see that bull trap play out in the US in the coming days and a little bit, we're probably going to see a sell-off from this level. So we will do what the US does because we're here because of the US. I don't think we're here on our own accord. So that said, knowing that 72.50 is a really, really strong level, if you're not in already, I would be waiting for that level to break before entering it, definitely. I'd be probably looking for shorting opportunities if the market switches around from here. Excuse me. And if you get that, you can play it either side. I think if it breaks the 72.50, it's broken a very important resistance level, and you can trade it with a bit more confidence. But if it does the lightning bolt on the way down and tracks off from here, you could probably bet your bottom dollar it's going to get down to those low sevens again, if not high sixes. So I think it's at a good place. I like it where it is because it means that we've got an opportunity to trade at either side. It's right at the top of the zone though, where you wouldn't be going and entering right now. And if you were long and you're reasonably long, this is the sort of place you'd be placing either a bit of a take profit or at least a break even, because you know that there is trouble ahead. And the trouble is not even ahead. The trouble is right here and right now. Okay, so that's
we're probably
how
going
we're
to see
treating
it
the
during the session. I mean, think about it. Yep. We're at a critical resistance ahead of what? CPI. So again, even though that's a US figure, it's going to come through to all the markets. So
100%, 100%. Yeah. We'll do exactly what the US does.
I think this is also a little bit in line with the movement into financials. Obviously, CBA had a bit of a good result today. Buy back this, buy back that. That's always the go-to move from banks, I think. Create buybacks, create the markets up. But we've also got all-time highs coming in through, the FTSE 100, thanks to the energy movement here. Look, with energy, we'll play it by year. I mean, oil, it's hit that 92, as we mentioned, it's kind of a resistance. But for the trade of the weeks, Ty, what do you think your trades of the week are going to be? I'll go in with my 2 trades of the week. I think one is going to be probably around the gold trade, and I know we've said that a few times, but I do think it's getting ready for a really nice crack here. So I think gold's going to be one of them, but also potentially here the Tesla. Now the Tesla could move through this 945 even today's session, and if it does, the next logical conclusion based on options is going to be 1,000. There's a lot of a lot of calls at 1,000. So we breach past this. It's a good day story because you've got a lot of rejections. You take out shorters, which there are many on this stock right now, and we breached towards that 1,000 level. So I think that Jets probably also for me, and maybe gold, maybe even gold versus yen, based on what I've seen so far on those charts. They all present really great opportunities on breakouts here. Your thoughts?
Isn't Elon buying Mercedes? Or didn't I read somewhere that he's buying Mercedes?
Not really.
That's what I read. That's what I read. Maybe it was just a tweet or whatever it was. But I think he's buying Mercedes, the company, right?
It says like
the whole company.
Daimler. Which one?
Mercedes.
I don't know. I don't know. Okay. I don't.
Apparently,
I kind of doubt it, but hey, I'm not privy to that news. But then I haven't been reading the news over the last couple of hours, so I wouldn't know if it happened 10 hours ago or not.
No, I saw it on Facebook. I don't know.
Oh, that's definitely fake news media then.
Fake news media. I agree that the 1,000 is a very, very important zone for this, and I think that if it's around that 1,000, put call wall on it. We'll make sure we make a note of that to see how it is playing.
Yes.
But I agree on the Tesla. I'm going to go. I think the trade of the week for me is actually the dollar index and everything against the dollar index. I still believe in the level. I believe in the level where it's at, and although I'm not going to trade it until it does what I need it to do, which is make a lightning bolt on the way up. If it makes a new high and breaks past those moving averages, past the 95.80, I'm liking it a lot. But if we get a weekly close below that sort of 95 sort of 20 area, I fear a lot for it next week. And I think it's probably either way. I'm happy to do either. But I think we're going to get a good breakout probably early next week, I think, if not on Friday. And we're going to get some direction on the euro and this one. 95.80.
Okay. So 95.80. So yours is the DXY. I'm going with the triple combo meal deal. I like all of them. And just finishing up here, Ty, a little bit on crypto. I think that crypto showed the first stage of pretty decent recovery. We obviously talked about it in a video through YouTube and also on TradingView. And I mentioned the fact that this was the first time that we saw 2 weeks in a row that actually closed bullish, a fairly big deal for it. It's hit the 46 or just underneath the 46, long leg dojied. We know what that means. Indecision at this key level between here and here. And we close above. I think it's probably the real deal in terms of recovery. Bitcoin and crypto can do their own things and they can be separated markets. And there's a lot of big players in there. So just be careful here. But yeah, Bitcoin's starting to look much, much better. We close above, and all of a sudden we're moving towards that 50, 52K. And that could be amazing. So a lot of people are getting more bullish on this now. But I think this break, as it was going through here, was incredibly significant. Yeah,
no, I hear you and agree. So I'm getting some confirmation about Elon. He's buying part of Mercedes, or he's buying someone's share. I'll give you all a bit of insider information. I think it's insider information, but we can say it in there because it's 4 years old now, or maybe 3 years old. Thomas and I, for Thomas's birthday, I think was it your 30th
4 years ago? 4 years ago, yeah.
Was it your 30th birthday?
Yeah, 30th. Yeah.
For his 30th birthday, I took him on a Mercedes drive day, where we drove like the best of the best Mercedeses for a whole day, and we stayed out at Phillip Island and got flown back by helicopter. It was an awesome time. But anyway, we were talking to the chief engineers of AMG at the dinner, the gala dinner they had that night, and they assured us, absolutely assured us, that their automated technology was far superior back then. 4 years ago, they absolutely promised us that the Mercedes technology for automated vehicles was well ahead of any other company in the world, including Tesla. So I'm not
so was the claim.
That was the claim. That was the AMG claim. Absolutely dead set. We've had a word of lies what they told us. And we're talking about the chief engineers of AMG, not like some guy who's had a couple of too much to drink. So take that with a grain of salt, but that's what they said. And that was and I can't imagine they would have gone backwards.
Well, you'd think that, and I think it's going to be an interesting time. I mean, they haven't really proved it yet, so we'll find out whether they can. They haven't done anything, so we'll find out whether they get it done. So Peloton has its result, and its result was slightly better than expectation, coupled with the rumor that Amazon's buying this thing. Look, my opinion on this, I think it's a snake. a Snexies, this one. I'm not a fan of the Piton. I know there's profit here. I know it's gone through and it all looks great. And there's all this potential of moving up and stuff. The problem with this trade is it's one of those ones that gets you in, nightmare scenarios. It's based on a rumor, and then it's based on some kind of earnings. So you got like a rumor into earnings, and then that kind of compounds for a few days. Retail get into it hard. It's not something that we would treat as a business. And I think you've got to always ask yourself the question, you with your $10,000 per trade, or your $1,000 per trade, or your $200 per trade, you might be prepared to go in hard on it. But ask yourself this, if you had $10 million, would you allocate $500,000 to this trade? And if your answer is always no, then you probably shouldn't do it. And I think that's just because at that point, you don't really need to make the trade. You know what I mean? You don't really need to be in it. I think that's why I always think do this. And I've been doing some mentoring with people recently, Ty, and unfortunately, some of them have some pretty horror stories of making serious cash and then losing serious cash. And it always is the same story. Made tons of money on super ramping stocks, AMC, GME, some kind of other crazy stock. Did it once, did it twice, did it 3 times, made $1 million, lost it all. And you know why? This mentality.
Yeah, exactly right.
So,
yep.
Yeah.
I don't think it hurts to actually think about it that way, where, ask yourself, if you are trading $1 million account, would you risk $10,000 on that trade comfortably? Because if you can't, you shouldn't be trading it, because that's still only the 1% rule anyway. Don't gamble. Yeah, just don't gamble. If you wouldn't actually risk a proper percent with a proper account, no matter what size you're trading, just leave it alone and look for the next one. And if you want my opinion, I wouldn't.
I couldn't do it. Yeah. I couldn't do it. It's pure hype and FOMO, and you can get in for a day, but when it cracks back down, it's going to brutalize you. And we know this because this is not the first time this stock's done some hype moves and then destroyed everybody's dreams. It's not really one that I like. And I think that's where sometimes trading the boring stuff, trading the Microsoft, trading the indices, trading the sectors, trading whatever else, big stocks. You could even leverage a sector with a little bit of leverage and still theoretically be safer than this stock. You could still very much be. And I'll leave you with that one today, but I'm sure Tyrone has some announcements. So I think you could leverage another sector, an index or anything like that, and be safer than trading one of these things. Yes, and you could make the same money. So it's all about how do you do it.
Yeah, 100%. Okay, announcement time. Obviously, we're going to talk about the conference is 30 days away now. An email went out today, and I saw the countdown clock was down to 30. So we are literally 1 month away. So we cannot wait. We're getting very, very excited now. International borders are opening in time. I know we've got a lot of fans in Singapore, and a lot of those Asian-based countries are actually closer to Cairns than we are. Book your flights to Cairns. Get there. It's going to be amazing. We've got 3 days of absolute awesome trading ideas, great speakers, and a great time on the boat. So definitely look into that. If you want more information on it, just contact us. But the emails are going out. The Q&A tomorrow, it was very, very popular last week to go in the morning. In fact, only one person wanted it in the evening. So that's going to be at 9:15 again, AM tomorrow morning. Okay, so definitely 9:15 AM. We're going to run that for a few weeks. People just seem a hell of a lot happier. And from my understanding, Tom has suggested, due to popular demand again, that this Wednesday webinar, we're going to actually attempt to, please the masses and actually run it at 9 AM in the morning as well next week. Okay, we're going to give it a trial run, and we're going to run to 9 AM. We've had enough. Look, nearly half the people who have attended have said that they actually would prefer that. So look, let's give it a go and see what happens. It's great because it's at the US close, and it does give a lot of people from America a chance to obviously participate, and of course in Europe. And of course, there's always the opportunity, with these webinars, they're not always that time sensitive that, you can't watch the replay at whatever time you want. So let's give it a go. Let's see what happens. Let's do it at 9 AM next Wednesday. So the link, we will update the link. So you'll get the alerts all at the same time again. We'll do it for next week only, and we'll just see how that runs. Okay, we'll do it for next week, and maybe we'll just start mixing them up a little bit. We don't want to confuse people, but what we want to do is actually please people, and that's what people are asking for. So why don't we give that a bit of a go, and we'll see how people react to that. I think, look, from a market standpoint, I think it's a good thing. I think it'll give us a lot to talk about after the market, and then it gives us into the Asian session to start trading. So it could definitely be a good way to do it. This is the boat that we will be on. We are excited. We can't wait. We're going to be wearing matching T-shirts. Hopefully it's going to be warm enough that we don't even need T-shirts on the boat. But yes. What?
All right.
Why are you laughing? Why are you laughing?
Well, for you maybe, but maybe not for everybody else. There's called the YouTube bod. It's not the best. All right. So anyway, guys, we'll see you next week. We'll obviously see you in the rooms. Thank you so much for joining us. Please subscribe to the channel if you'd like to. And we do wish everybody out there the very best of trading for the week. I will say this: be careful, like we've mentioned, about this CPI data. Where is the resistance on the US 500? Are we at the resistance coming into the data? Look at gold, look at silver, look at the dollar index. There is going to be a breakout trade in some of these, in one of them at least. And it's going to be, I think, pretty special. So hopefully you get on one of them, and we'll see you next one. Catch you for now.
Absolutely. Robbie, just quickly, we use for just retail normal options trading for the ASX. We use implied volatility. That's the easiest platform to use. Really easy to use, especially when you're first starting out. And is it possible to make a weekly income, mate? Absolutely. Big buttons.
It's so easy to implement strategies on that platform, guys. I'm telling you, like, it is made for even, and you know what? That's what I always liked as well. Because when you start trading big money in options, sometimes you can accidentally, if you make a mistake, you can get brutalized. Don't think there's like this thing with markets, and I'll say this with options. If you put in a spread price, even though that price is not fair value, they'll take it from you.
Yeah.
They will take it from you. You've got to, so a lot of trading with options is actually about massaging in the order. And maybe we'll do that one day where we actually place the order in, Ty. I think we've got to do that. So you can see the way we do it. We go in too high, and then we slowly bring it down until a market maker comes and takes it from us. Otherwise, you're getting totally ripped off. Yeah.
I'm doing a series of videos on it for the options masterclass. The other video was posted. So everyone who's done the options masterclass, you should have seen another video posted today about the different pricing and how a dividend prior to expiry and after expiry actually makes a big difference to the prices. So definitely check that video out. But I'll show you how to massage the prices in that one as well. So that is going to be really, really cool. Thank you so much, everybody. I look forward to seeing you tomorrow morning. Keep an eye out for the link in Discord. 9:15, and next Wednesday, just be very, very mindful. We're going to be doing it at 9 a.m, not 9 p.m. Okay, we're going to give that a go to see if everybody we'll give the people what they want, Thomas, and we'll see how they react.
All right, we'll see how it goes. Thank you so much, guys. Bye for now.